suitable companies. You've got to look at this from the investor mindset, right? So accredited investors in a Reg D offering are a skeptical bunch. They're going to do due diligence. They're going to check with their buddies. They're going to look at the investment, the competitive landscape. They'll spend time and effort checking into your company and your offering. Fair enough. But with that understanding, then that gives us a better handle on how we should market to them. Demonstrate the credibility of the company, the credibility of the team. Make sure that the offering documents are professional and comprehensive and well written. But also the terms have to be attractive. The valuation you're normally going to get in a Reg D offering will be substantially lower than in a Reg A plus, for example, because we're dealing with accredited, sophisticated investors who really demand that. One of the things that I like to use as a test in considering the viability of a Reg D offering is it should be so attractive that when an investor who recognizes and understands the business is evaluating it, they like it so much they don't want to tell their friends because they're worried that if they do, their friends might take the capacity, thereby displacing them from getting in. They have to think of it as a hot opportunity. It needs to be easy to explain. We're doing online advertising, right? We're doing social media advertising on Facebook and Instagram, and if we can get into it, TikTok, because it's so much more cost effective than Facebook and Instagram are. But we're talking about somebody's doing something else in their social media stream, and we're intervening with an advertisement that has to be compelling and attractive and easy to understand. And if they click on it and come to the offering page has to be so compelling that they stick around, that they spend 10 seconds so that we can get them to spend 30 seconds, so we can get them to spend 2 minutes and potentially engage, give us their email, start an investment even. In these online offerings, you would be surprised, if you haven't done them before, you would be surprised how often people will advise themselves and will start an investment or even complete an investment on their mobile phone in these online offerings. Obviously more so in more retail oriented raises like Reg A plus, but we see that in Reg D 506C offerings also. Must be easy to explain. The trends in the business must be favorable. These are just obvious things. If you're in a business where the market's declining in size, it's going to be hard to convince people to invest. Very obvious. Has to have a credible team. The kinds of businesses, pre-IPO companies that have the potential by the nature of what they're doing and the stated intention to go and list when the circumstances suit, is going to be a more attractive kind of company in a Reg D offering. Biotech companies can be very strong. AI companies are topically, very current. Green tech companies, since the passing of the IRA Act, which puts a lot of money in play for companies that do good things in the green tech space. There's a lot more there's a lot more engagement from accredited investors in Reg D offerings that are green tech from that as a result of that.